skyrocketing rents to shifting regulation, today's property investors are navigating a market in motion, and staying ahead has never been more important. I'm Dion Besser, and this is Beyond the Deal. Welcome to Beyond the Deal. I'm Dion Besser from Besser Co. Today I'm joined by REIV President and Head of Property Management at Besser Co, Sam Hatzistamatis. He's here to break down what investors need to know right now, from returns and risks to rule changes shaking up the market. Sam, thanks for joining me.
Hi, Dion.
So let's jump straight into it. Who's active right now in the marketplace and what are they chasing, growth or yield?
Look, we're seeing a lot of genuine investors in the market right now, those who are savvy, aware, and know what's happening in the market. They've followed the sequence over the last 5-6 years, which has been quite volatile as a space. And we're seeing them really look at what's out there to take advantage of the market. So with that in mind at the moment, there's a bit of a yield attraction. What can get me the quick return, knowing that we're not sure what's going to happen in the greater space, whilst we build that stability out in the market. So they're getting the quick returns, being in the market, keeping that capital there, so that when it's time they can swap that capital around or invest further.
Wonderful. Vacancy rates are low, but so is affordability. What should landlords keep in mind?
Look, I think it's really important. I think you've hit it there. It's the affordability piece. So we saw market rates just skyrocket for a couple of years, and a lot of that was recovery post-COVID, where rates, particularly in the inner city, had decreased quite heavily. And we've seen that really rise up from there. As a result of that, there's this unintended consequence that there's an expectation that rates will increase to that level every year thereon. What we're seeing now is more of a stabilisation and a return to a standard market, let's say pre-2020 or the 2019 market, where we've got rents that they're still increasing because it's still a demand and supply chain piece. The demand's there, but people have hit their roofs when it comes to what they can afford to pay. So people aren't just paying it to be in a home. So what's really mindful is finding the right tenant at the right price for your property and keeping that stable and keeping that there and capitalising elsewhere and finding other avenues. And if we add to that, it's looking at taking into those market factors that have changed in that time, whether they are your land tax imposts or safety checks and compliance, or even insurances, to make sure you maximise or reduce any risks.
So it's basically that stabilisation piece is what you're talking about. Things are starting to stabilise a little bit in the market.
Absolutely, and that's what investors crave. If you're in housing, you're typically craving a more stable investment atmosphere, and that's what they're craving, and that's what you'll lean to. So if you can lead to those and stabilising it, your own, and control your own factors, the rest of it will fall into place.
And how is tenancy reform affecting landlords right now?
Look, tenancy reform, when it started, the talk of it started back in 2018 and maybe even slightly earlier, came into effect during 2021. And what it created was through what was already an unstable period, further destabilisation. It was about not having control, not knowing. What you'd always known had changed. So it was a change in your own mental space in looking at it. So that's disrupted that space quite a bit. Those who are attentive, or there are other issues going on at the time, saw it as the opportunity, okay, it's too hard now, I'll move out. What we're seeing now, we're 4 years on from that legislation coming into effect, people are getting used to what's expected. It's now part and parcel of being an investor because it's been an adaptation. We are still seeing additional change in that space. But again, it'll be much the same of adapt. We can't change the legislation. What we do is we work with it and we understand it and put it in place. So it's really important to embrace that, and rather than battle it and just go, okay, this is my legislation, this is what I need to do. I can budget for it, I can plan for it and work around it from there.
So based on that, I mean, what's your top tip for investors for the next 12 to 24 months to sort of tackle these reforms?
Look, I think the biggest tips I've got is make sure you've got a good agent in play. Keep yourself someone who's a member of a industry body, who knows what they're talking about, who does internal training, but also communicates with their investor base around the changes. I think it's really important to know what's there rather than to guess. And then take that and make sure it's part of your understanding of what the investment journey is going to be like for you, whether that's in the immediate term or over the long term, over 5, 10, 20 years, depending on what the purpose of your investment is. Apart from that, the other one is ask questions. Always ask questions. If you're not sure, don't guess or assume or jump on a Facebook page or to a group of friends and say, what does this mean? Ask the experts. That's why you're paying for your real estate services, get in there and ask the people who are educated to know that. And if they don't know, they will usually come to you, leave that with me, let me get some further insights for you.
So really right now what you're saying is that your agent's superpower is really understanding the legislation and being able to give you good advice on how to tackle that.
Absolutely.
If you need to.
Absolutely.
Great advice. How can the REIV and Besser Co support investors moving forward?
That's an excellent question, Dion. I would say to you, the REIV as the only peak body in this area in Victoria has an opportunity to advocate for what is needed in that investment cycle. That's both investors and at the agency level. So by working with a member agency, so seeking out an agency who's a member of the REIV, it provides an open channel up the chain in working out on these strategies. So for investors, if they're feeling pain points, if there's sections of the legislation which are a challenge, or even in their place out, this is the way forward. Beyond that though, the REIV is that source of training, compliance management and education to ensure that the best and most knowledgeable is out there, and it's based on fact and not hearsay or guessing what the legislation is intended or what you need to do. So it's about making it clearer, more streamlined and more effective for you as an investor. Working with a member agency is really important because that allows you to have access to that directly, rather than and people who aren't in that sphere and don't have access to the same level of information.
Yeah, so it's all about your agent having all those resources, that knowledge base, and somebody basically to refer to if they need to help with the interpretation of the legislation.
Absolutely, and someone who can also go in and bat for you as well when needed.
Wonderful. Well, Sam, thank you very much for joining me today. This program was presented by Besser Co Real Estate. I'm Dion Besser. Thanks for watching.